If you're watching this, you maybe just realized that you don't have enough cash to build the business that you want to, or to bring your side hustle to the point where it might become full-time. That's my story about 16 months ago. While I was working 9 to 5 at a bank. Half the time running teller transactions, and the other half of the time opening accounts for people, and 100% of the time bored out of my freaking mind, wishing I was running my own business. So using what we'll be talking about today, I quit my job last November and started working for myself from anywhere I want to now that I live in that van. And right now we're kind of in the middle of Atlanta, but we're at a national wildlife refuge. At least I think that's what it is. It might not be. Right on the Chattahoochee River. And it's been the perfect little office for the day. But wherever you are in your business, whatever your goals are, if you don't have enough money to get there, let me show you how I built a business completely off of leveraging credit cards. Because all 4 of these cards in my wallet are just for business use. Okay, back to the bank where most of my days had me feeling like this. I had been trying for a couple years to get my YouTube channel off the ground and start to make money for it. But my growth had been really slow up to that point. And because work sucked so much and just stressed me out, I lost so much creativity that I realized if I wanted to actually grow this thing, I would need to put full-time energy into it, so I'd have to start working for myself. Now, we had been saving and investing, but that was for our retirement and for a house, which eventually just turned into a van, which is my house on wheels. And before I just quit my job, I needed to prove to myself and to my wife that I was able to make and sustain an income that provided enough for us to continue living our lives. Totally forgot to bring something really important over here. Let's go grab it. And hopefully no one steals all my crap. There's only one way in and one way out, so I think we're good. Unless the squirrel will get it, but I don't think he can carry my MacBook. Luckily at this time, my wife was making 2/3 of what we needed to live, and we were using about half of my income to just save and invest. So we sat down and ran the numbers, and I needed to be able to bring home $1,000 every single month. And if I did that consistently, then my wife and I agreed I would be able to leave my job and start pursuing what I actually wanted to do. That's better. And I was honestly pretty skeptical if I was ever going to be able to do it, because I hadn't proved to myself that I could make legitimate money working for myself. I made a couple bucks here and there, and one of the most consistent ways I had done that was by reselling soccer cleats on eBay. And since I was in the reselling world, I had heard about Amazon FBA before, and so one night I decided, hey, I should actually start learning about this thing. And so I stayed up literally all night just watching videos on YouTube about Amazon FBA and how to do it. And a lot of people say that books is the best way to get started. I honestly don't really agree with that, having done Amazon for a while now, but that's a topic for a different video. And so I took a little bit of money that I had saved up from reselling on eBay and a little bit of debt on a credit card, and I bought $50 worth of books and a lot more in retail arbitrage, which is buying something from a retail store for the purpose of selling it again on Amazon.
Do you teach on YouTube?
Yeah. Wow, did I pick the wrong time to start filming? I was sitting here just writing videos for 3 hours today, and just as I start to film, but 5 people and all their dog just come over. I hope we can catch the rest of this light. So in August, I sent in my first shipment of those books and the retail arbitrage stuff, and it cost me $621.77. Unfortunately, those books never sold because I probably didn't do the best job at sourcing them, and I hate books anyways. But honestly, from that $620, I didn't even have 500 of it. I think maybe 250 from eBay sales, and the rest of it I put on this credit card, which I had gotten a long time ago. It's a Wells Fargo card, which I got in this video, but that video is super old, so you don't have to go watch that. And honestly, I expected to have to pay it off from my job. I figured I'd be able to make money from Amazon, but I wasn't 100% confident that it would actually turn into what it did. But I shipped it in on August 31st, and by September 3rd, I had already made my first sale. But not only just that, my very first day selling on Amazon, September 3rd, 2020, I sold 12 items for $252. What? I knew I was gonna probably get about half of that back after Amazon fees, so 126 of the $620 that I'd already spent will be coming back to me, which is already probably about half the debt that I had. So I decided I would be going all in if that was what one day looked like. As we can see, right around that time, I stopped posting any videos. This is August 31st, 2020, for a long time, and spent almost every night that I could just working on my Amazon business, either going out and buying stuff after work or shipping it in. But the crux of this video, I didn't have the money to do that. So when I mentioned that video a second ago about how I got that Wells Fargo card, I'm really glad that I did, because I started to actually build credit. I used this Wells Fargo card for all of my initial purchases in the business, and I still use it to this day. It had a $3,000 limit though, and I knew if I needed to take home over $1,000 every single month, I needed a little more buying power than that. So I applied for this really beat up looking Chase Freedom Unlimited card for 4 main reasons, and these 4 reasons I think are pretty important when you're looking at a credit card to do this with. The first reason is that I already had an account with Chase Bank. Having worked at a bank, I knew that banks have internal credit scores, so applying for a card that I already have a relationship with will give me a leg up. And even though my credit wasn't phenomenal, I ended up getting approved for it. The second reason I applied for it was the rewards program. It gave you 1.5% back on every single purchase. And since I've had that card, I've earned well over $1,000. And a lot of that comes from the third reason, which is a $200 bonus that you get when you sign up for the card and spend $2,000 or more in the first few months of purchases. And I knew since I was using this for inventory in my business, I would definitely be spending more than $2,000 in 3 months. Then the fourth reason is the biggest reason of them all. And it is that it had 0% APR for 15 months, but that was on purchases, which is the most important thing to look out for, especially if you're trying to carry a balance on your card because you don't have the money to pay it off because you're starting a business like we're talking about in this video. And here's where we need to make a really quick pause just to talk about that. If you're looking for a 0% APR card, you need to know what type of 0% it is. There are two main types of 0% APR cards. The first one is a 0% balance transfer card. I just looked at balance transfer cards. This Discover It balance transfer gives you 0% intra APR for 18 months on balance transfers. However, if you were to get this card thinking that you get 0% when you're just out spending money, you're gonna end up owing the banks a ton of money in interest because that only gives you 0% on balance transfers. Whereas if we look at another card like this one, its purchase APR is 0% for 21 months from account opening. So just please make sure that you know which type of 0% your card has. And I always look for 0% purchase APRs for at least 12, 15, or 18 months. People blow my mind, man. This dude just came and just posted up right next to me as he saw me filming. You gotta pick less public places. It is a good thing to know that when you're looking at getting one of these cards that have 0% interest, the banks are gonna need to trust you more, so your credit is normally gonna have to be a little bit higher than if you're going for an intro card. I might be misremembering a little bit, but I was working at the bank in the middle of 2020, and you know what that means. All credit was a little bit tighter because of it, and so we needed a minimum of 720 credit score, but I think it's gone down to like 680 now because I recently got another card, which we'll talk about in a second, and when I asked one of the bankers at the bank I got it from, they said 680 was probably all you needed, even for a 0% card. And I really hope you know this, but no matter what, you're gonna need to make your minimum payments even on a 0% APR card. Even if you're maxing out the card and you plan on carrying that balance for the 12 or 15 months that they give you 0% interest, you're still gonna wanna make your minimum payments, which will normally be anywhere from $35 to $45. Otherwise, you'll probably get a $40 late payment fee. And what's even worse is they'll give you a penalty APR, which means you won't have that 0% APR anymore, and you'll be forced to pay interest on that balance until you can pay it off. And it'll destroy your credit. All right, back into the story. I got this card pretty early on because I maxed out my Wells Fargo card in just a couple of weeks. And luckily I got enough payouts to at least pay off the statement balance. I realized my utilization was gonna go up, so my credit would go down a lot. So I had to apply for the 0% card pretty fast, especially because I still wanted to buy inventory. So I was planning on maxing this card out again. So I needed to apply for this card before that too. So I got approved with a $3,700 limit, and I started making all my purchases with this card until I maxed it out, which took me about a month and a half, I think. During that month and a half, all the payouts that I got from Amazon would just go straight onto my Amex card. And since I was still working at the bank, I didn't need to pull out any money from my business, so all the money just went back to paying off all the business expenses and growing the business as much as I could. I didn't pull any profit. Obviously, I still paid the statement balance on my Wells Fargo card though. That way, I've never paid interest, still haven't, and I didn't pay any late fees. Let me find a picture for you. Luckily, after doing this for just a couple of months, I was able to leave my job, and I put my 2 weeks notice in on November 8th of 2020. Because we talked about earlier how I was investing and saving about half of what I was taking home every single month. Well, luckily, I got a third payment in November, so we were able to pay ourselves all the way through to January without having to take any money out of the business. And I don't know why, but this is the picture that I have to show you guys because for some reason, I just took off my shoes and stamped them with my bank's stamp before I left. I'm a weird dude. So all through December, we continued to do the same thing. Since I was putting all the money back into the business, I only had to carry like $1,000 or $1,500 balance on my Chase card because I was able to pay off my Wells Fargo balance as well as most of my Chase balance. But in January, I started to have to pay myself, and that's when things got really interesting. Paying myself meant $1,000 that was previously going towards paying off my credit cards was now going into my personal bank account, so I had to get a little bit smarter with how I was dealing with credit cards. During this time, we also organized our businesses as an LLC, and that could have changed some things, but honestly, it didn't too much because we continued to use the same cards for the same purposes. And this is because of how I've been using them before. And here's the thing, all the while that we were just a sole proprietorship, we technically didn't have to worry about having business expenses in accounts and personal expenses in accounts, but I always separated everything because it's just best practice to not mix your business and personal expenses ever. So because of that, I didn't have any... Hey bud, what's up? Oh, you're good. Dogs always think that my microphone is a toy. Yeah, it looks just like it. What's up, guys? You're so cute. This video is such a simple script, but it's gonna take me the longest that it's ever taken me to shoot. Essentially, since we abided by that principle, we didn't have any personal expenses on these credit cards. It was all business expenses, even though they're technically classified as personal credit cards. When we organized our business though, we did end up getting an actual business credit card, the Chase Inked Unlimited, which basically has the same benefits as the Freedom Unlimited, just on the business side. And that had another $3,000 limit, which gave me more purchasing power and actually helped to spread out where I was spending money and where I had to pay off different credit cards at different times. I was really hoping when we picked out that card though, that it was gonna have a $10,000 or higher limit. And if that was the case, I honestly would have retired the other two cards because their limit together was only like $6,700, but I just continued to use them. And here's the point where I say I'm not a tax pro and this isn't like tax advice, but I have talked with some people and this is my understanding of using personal credit cards for your business. The first thing that you should know is that you can do it. And I did put see below here because we're going to write out what is going to be below, but from everything that I understand, you are able to do it, but that's because I don't mix my expenses. I did put an asterisk here because we're going to talk about that in a second, but seriously, if you're gonna be using a personal credit card, especially if it's just for business, try not to put any personal charges on that card and treat it like it's just a business card. I even have my personal cards that I use only for business in my QuickBooks account that just draw the transactions automatically because I know everything is gonna be for business. The third thing is that you'll be in debt to you. Well, your business will be in debt to you as a person because your business is a separate tax identity as you are. So if you do make these purchases on a credit card, the way that it's normally gonna have to work out in terms of accounting is that you have a debt in your business that you owe to yourself. Then your business will pay you personally and you'll pay off your credit card. And then the last thing is just a little bit of a tip that we're gonna talk about, which is the asterisk, which is to reimburse yourself. There are some times that even though we do have cards that are specifically for business, we realize later that something that we bought, like a coffee that we got out, was actually a travel expense or a business expense. And we're still able to write that off, even if we didn't use a business card. That's where I actually have an account in QuickBooks called Owed to Owners that I'll put those transactions in, and I'll actually physically reimburse myself when I take distributions from the business. That way I'm paying myself back before I actually pay myself, because a lot of times the business owes me money. But we're getting really into the weeds. Now, even though I didn't retire the Wells Fargo card, it did start to have the potential for interest because it didn't have a 0% purchase APR like the Chase Freedom Unlimited and the Chase Inked Unlimited did. So I tried to stop using it as much as I could and put all the purchases on the Chase Inked card while I kept the balance on the Chase Freedom Unlimited and just paid off the monthly payment every single month. And just in case you're wondering, the balance on the Chase Freedom Unlimited stayed around $3,700 minus like $35 every single month. So it was around $3,400 to $3,500 and steadily decreasing. I guess relatively steadily. It was only 35 bucks. Since I was always able to pay off the Wells Fargo card and the Chase Inked card had the same limit as the Wells Fargo card, I was always able to pay it off as well. But because I needed to start paying myself, I started organizing my payouts when I would get them from Amazon, and I put 60% of everything that I got paid out into an inventory payment account that I would later use to pay off my credit cards once the statement rolled around. And because of the stuff that we're going to talk about on Sunday's video, subscribe for that, I was always able pretty much to pay off the inventory that I spent that month, and normally even a little bit more to chip away at whatever debt I had in the business. Here's where you might get a little bit of regrets though, because if you realize I had $3,000 of perpetual inventory debt and I was pulling $1,000 out of the business, so if I just waited 3 more months at my job, I would have no inventory debt and still be able to pull out the $1,000, but I would not be happy. So I think I made the right choice. To make a really long story shorter, I was doing this for about the next 7 or 8 months, and I was really only able to do it because of the rules that were in my business, and we'll talk about those before we get on to what I'm now doing, since my business has had to change. If you watched any of these reselling vlogs, which are all the ones that I did before I moved into my van, you knew that I had these rules. Every 2 weeks, I would try to spend $1,500 at around 100% return on investment. That way I'd be sending in about $3,000 worth of profit every single month. This is because I was at a sort of equilibrium point, and here's what I mean by that. When you're starting out on Amazon, you don't have any inventory, so it's best to put all your money back into inventory because not everything is going to sell exactly when you send it in, and some stuff might not even sell at all. You'll always have a float amount of inventory at Amazon, which is the inventory that just stays there, and if we log into my inventory lab, we'll see that mine right now is right around $5,700 because I have a lot in FC transfer that isn't available for sale yet. During this time period that we're talking about though, my float was normally around $4,000 worth of inventory that was just sitting at Amazon at any given time. And some of it, even though it had been there for 3 months, would finally sell because prices change or I get the buy box, and other things that I just send in maybe will wait that long to sell. So if your rules are the same for every month and you keep sending in just about the same amount of inventory, this will be your inventory and this will be time. So when you start out, you're going to send in inventory, and then it's going to start to sell, and then you're going to send in more inventory, and then more of it's going to sell, and then you're going to send in more, and then more of it's going to sell, and eventually you're going to get to the point where these peaks and valleys are the exact same, which is essentially where you have a constant float of inventory, because when you send in inventory, that same week, you're selling the same amount of inventory. And so if you were sending in every single day, instead of looking like these peaks and valleys that happen every 2 weeks, it would just be flat. That's why I was able to perpetually buy inventory and pay off my credit cards, because I got to this equilibrium point after those first 3 months-ish of selling on Amazon, because every month I would send in $2,500 to $3,000 worth of profit, and I would always sell that as well. But what if you want or need to grow your business? The answer to that question is one of the reasons that I got another credit card, the Wells Fargo Active Cash. And I got this one just a few months ago because the 0% interest on my Chase Freedom Unlimited card was coming to an end this month in December. And when I got this new card, I still had a $3,300 balance on my Chase card. We decided that it was best for the sake of my wife, who also is a partner in my LLC and needs to make purchases for her different parts of the business, that we should use every card that we can except for the inked card for my reselling inventory, because sometimes I would be filling up that card too much when we need to spend money on it for other things. So I applied for the new card, and luckily my limit was bumped up to $4,700 on the Wells Fargo card. But that's one of the reasons why I said earlier that I only think you need about a 680 credit score in order to get one of these 0% cards, because this card is 0% for 15 months. I do have a relationship with Wells Fargo, but because I've been doing this, my credit went down. One of the side effects of doing this for your business is that your credit score is probably going to go down, especially if you carry a balance for a while, because credit utilization, or how much of your credit limit you use is a big factor in determining your credit score. But personally, I would rather my credit score get a little bit lower for the sake of me quitting my job, moving into a van, building my business. Those are risks that I'm definitely willing to take. So on the new card, I got 0% interest for 15 months and 2% back on everything, which is even better than the Chase card. And you don't actually have to do a balance transfer when you get the new card. Since I had $3,300 that was on the Chase card, I just started making all of my purchases on the new card until it got maxed out, and everything that I got paid out from Amazon would go to pay off the balance on the old card. So you don't actually even have to do a balance transfer. And essentially, you can do this forever, because with every new credit card that you get, your credit score is going to increase. And if you're spending the same amount, you're going to be having a lower utilization because you're spending less of your overall limit. And you can probably get a 0% interest credit card maybe every 6 or 12 months and just rotate purchases between them. But if you don't have a 0% card, you might need 3 different credit cards to rotate between. So you make sure that you pay off stuff after its statement balance. But here's the thing, this is still very risky. And my plan, and what I think is honestly best, is to try to grow the business while paying yourself as little as possible. Because if I didn't have to pay myself that $1,000 or only had to pay myself $500, the debt that we owed on my credit cards would be way less. And so now I'm putting like 62 to 65% of my money towards inventory so that'll get paid off sooner. And I use this for the purpose of building up other income sources like this YouTube channel, which is now making me almost have to take nothing out of my reselling business, which will really help to spark that growth. But worst case scenario, you keep your credit around 700, you'll be able to get a new 15-month 0% interest card every 12 months and just spend the next couple of months transferring the balance by making purchases and paying off the old card. And you'll probably earn a lot of bonuses by doing that too. So even though I'm still in debt and this is super risky, I've never paid any interest and I don't plan to. But if you aren't 100% confident messing around with these relatively big amounts of debt, like in the thousands of dollars, I wouldn't mess with this. But if this is something you're all about, go for it. You can do it too. It's literally the thing that financed me quitting my job. And I will forever be grateful to credit cards because of it. So much more that I could say, but I'll see you tomorrow.